Welcome to Smart Tech and Biz, your go-to channel for decoding global finance, disruptive tech, and the business shifts shaping tomorrow. Today's report is urgent and historic. Wall Street has quietly bought over 1,300 tons of gold, and it's all because of BRICS. If you want to understand why gold is surging, what BRICS is planning, and how this affects your money, stay tuned. Since 2022, Wall Street has accumulated more than 1,300 tons of gold, a move that's now making headlines across financial media. According to Watcher.Guru, this isn't panic, it's preparation. Gold prices have surged to $443.30 per ounce, up 52% in 2025 alone, and the reason isn't a financial crisis. It's what traders call the debasement trade, a hedge against the weakening dollar. Wall Street is repositioning portfolios, buying gold ETFs, mining stocks, and even Bitcoin. But what triggered this shift? The answer lies in a rising global alliance, BRICS. BRICS stands for Brazil, Russia, India, China, and South Africa, a coalition of emerging economies that formed in the mid-2000s to challenge Western dominance in global finance. Together, BRICS nations represent 56% of the world's population, 50% of global economic output, a growing share of global trade, especially in energy, defense, and infrastructure. They've built their own development bank, hosted annual summits, and now plan to launch a shared currency by 2026. This currency won't just be symbolic, it's designed to bypass the US dollar in international trade. BRICS is building a parallel financial system, one that's independent of Western banks and resistant to sanctions. And that's why Wall Street is reacting. According to TV BRICS, over 50 nations now use the yuan, rupee, and ruble for oil and defense deals. Trade among BRICS nations surged by $700 billion in just 3 years, and 50% of that trade now settles without the dollar. Foreign ownership of US debt is at its lowest in decades. The dollar's share of global reserves has dropped from 70% to 58% over the past 20 years. This isn't just diversification, it's a full-scale economic realignment. And Wall Street is hedging against it by buying gold, reallocating assets, and preparing for a multipolar financial world. Gold is the primary beneficiary of this shift. According to Discovery Alert, central banks bought 166 tons of gold in Q2 2025, with emerging markets leading the charge. Wall Street followed suit. Gold ETFs stabilized in 2024 after years of outflows. Mining stocks are outperforming. Bitcoin is gaining traction as a stateless currency used for international settlement. Countries like El Salvador and Argentina have adopted Bitcoin as legal tender, showing how alternatives to the dollar are gaining momentum. Wall Street's reaction is reshaping portfolios. Let's break it down. Winners. Global tech firms like Microsoft, Google, and Amazon, they have diversified revenue and can adjust pricing globally. Domestic sectors like utilities, healthcare, and regional banks less exposed to international disruption. Losers, US exporters like Ford and Apple, losing market share to BRICS-aligned competitors like BYD and Huawei. Defense contractors risking billions in lost contracts as BRICS nations develop their own systems. Investors are rotating capital into resilient sectors and hard assets. Gold is no longer just a hedge, it's a strategic reserve. The BRICS currency isn't just about creating a new unit, it's about building parallel infrastructure. When Western banks froze Russia's reserves, other nations took note. Why keep wealth in systems that can be seized? BRICS nations are signing bilateral trade agreements that bypass the dollar, accumulating gold in domestic vaults, exploring blockchain-based settlement systems. This is a fundamental shift in how global finance operates. Wall Street's gold buying reflects recognition of this new reality. This is more than a currency story, it's a global power shift. If you want to stay ahead of the curve, hit that subscribe button, like this video, and share it with anyone serious about smart investing and global business. This is Smart Tech and Biz, where insight meets impact.